All right, you've heard the term CoreWeave on CNBC a lot, no doubt, the last couple of days. It's a New Jersey-based cloud computing and AI-focused company, and CoreWeave going public today. And at least until, a couple of minutes ago, it really did not have the reception that many had hoped, though it has turned higher now. CoreWeave, maybe not the most important stock in the market, but certainly has the perception of maybe hitting kind of the AR story, or AI story, I should say, a little bit where it hurts. Christina Partsinevelos has been at the NASDAQ all day covering live this IPO. The stock, Christina, moments ago, turning back positive. I know you spoke with the CEO and got some exclusive comments.
Yes, I did. So just to your point, it's trading above $40, so below initial expectations. The CEO acknowledged this on CNBC this morning, stating they needed to right-size the transaction based on buyer interest. So essentially that means they're adapting to tougher market conditions. But what the concerning part that often comes up is debt, which I discussed with the CEO just within the last hour. Mike and Trader, he emphasized to me that CoreWeave's debt repayment is structured around customer contracts. So these long-term agreements are typically about 4+ years with enterprise clients like Microsoft, and they're supposed to create predictable revenue streams directly tied to debt repayment schedules. The payments automatically reduce both the principal and interest at the same time as GPU hardware is depreciating. So it's creating a natural hedge against asset devaluation. He wanted me to know that because often right now a lot of people are talking about how GPUs are depreciating. And Kelly, that's exactly what we spoke about just in the last hour. CEO also challenged the notion that GPUs become worthless after newer models emerge, noting they can be repurposed and they can repurpose older hardware for less compute-intensive tasks, something Jensen Huang has said. So overall, my takeaways from my conversation with the CoreWeave CEO was very informal, standing up upstairs in the NASDAQ. He said that the debt appears more manageable because it's systematically paid down through reliable revenue streams. The assets retain more value than critics suggest, and major partners like OpenAI are a vote of confidence in the company's long-term viability because they do due diligence. So they're aware of CoreWeave's debt structure, and yet they're still signing that $12 billion contract over 5 years with the possible of 1-year extensions. So there you have it. It's on the screen, too, so you can see that
it's
really
great stuff, Christina. And what's interesting as well is to get the sense of his frustration about how this IPO has gone, and to the point Sarat made earlier. Could they have maybe waited a little while or kind of tested the market, maybe come back? You know, it just, for whatever reason, they were losing momentum throughout the week here.
But if they waited, what is that going to solve? The debt issue is still the same problem. It's in their perspectives. The markets, yes, the temperament's going to change for AI plays. I don't really think it would have changed that much. If you said this maybe a year ago, if they decided to go early, then yeah, maybe we'd see more of a stock pop. But I don't know if waiting would solve anything at this point, given what's already out there in the market in terms of their financials.